trading pivot point breakouts. Okay, once more, for all of you who have joined now, I see that people are still coming in. So price action trading school, pivot points advanced. This is risk disclaimer. And of course, today's agenda, pivot points, trading fake outs, and trading pivot point breakouts. So again, this is not to be confused with classic breakout trading. Trading pivot points is different, and it's not to be compared to classic pivot point trading, classic price action trading. Because classic price action trading, we will have that in future webinars, is trading either trigger happy, breakout retest, or breakout pullback continuation. Trading pivot point breakouts uses EMA combinations. So as you remember from previous lesson, pivot points are technical indicators that are used to determine important support and resistance levels. Usually it's the average of high, low, and closing price from the previous day. Okay. Usually it's used to determine market sentiment. They were originally used by floor traders, and those represent last session high, low, and close price. We use New York time usually, and you already know, but if you don't know, New York close time corresponds to our platform time. That is actually a great thing. There are a lot of indicators which plot pivot points. In the previous lesson, I mentioned some, so I will skip it. And this is the basic calculation of pivot point. So guys, once more, just a quick reminder. Pivot points determine directional movements, and they're based on calendar weeks. So you can find all this information in previous lesson. Just for your reminders, pivot points for February are based on the high, low, and close for January. Now, what is a fake out? Usually when market jumps into one direction, it will touch the support resistance and then reverse. We call it a false breakout, and I'm sure that 100% of you have been caught at least once in their trading lifetime in a false breakout. That can happen, but that can be traded. So it represents a point in the market where the price moves dramatically up and down, and it might start as the new trend is rising, then suddenly drives the price back down, hitting your stop. How many of those we have seen in our trading career? Well, almost each day we can see a false breakout, and that can be dangerous. But fortunately for us, you can trade this, of course, but there are strict rules, and I say again, strict rules that needs to be respected in order to carefully and successfully trade fake outs. Okay, so the thing is, it will happen, and it will happen every so often. This is an example of a fake out here. You can see this was daily range, the market was ranging, and look at this, a scholastic example of a fake out where the price broke through daily range. Of course, it was bought initially because there are always now moment buyers waiting for a break of daily high. But this was institutional selling, guys. Look at this. Institutional selling. Because institutions will always beat retail traders. No matter how strong you think you are, institutions are much stronger than you. So, needless to say, fake outs are every single intraday trader's nemesis, and they're not to be messed with. But as I said, fortunately for us, we can try to trade those. and I will show you how. Okay, now what you should be paying attention to is actually a difference between breakout and fake out. Fake out spikes in a desired direction, then completely reverses. Breakout is usually single directed move that aims for bigger targets and stop grabbers. Fake out happens usually during first 3 hours of each session during first 30 minutes. Well, breakout can happen anytime. It doesn't matter. It might happen, and I always say the first 3 hours of each session are usually best for trading. But the thing is, fake outs usually will happen during the first 3 hours of each session. Because, you know, when a lot of people try to aim for a breakout trade, they can do it after the strong news, they can do it after some rumor or whatever, but fake out usually happens during the first 3 hours because uh, Frankie fake, that is a term we traders use for Frankfurt Open, and usually during Frankie fake the price will lead. Okay, the price will lead in a form of a false breakout because London usually reverses. It will usually reverse Frankie fake movement. So yes, during the first 3 hours of each session and usually during Frankfurt Open, we will experience false breakouts or so-called fake outs. Fake outs usually lead to loss of profits because traders are caught in an opposite direction, and that is the problem. Well, the only remedy I know of is to actually try to spot a fake out and trade it. But yet again, it's a paradox. But you know, guys, that paradox is always the truth. So you need to decide whether you will trade a fake out or breakout, or you need to be quick with your fingers and actually reverse your trade. Yes, Apostolos, I can explain the second point. So you have London session, right? So major session, London session, New York session, and Asian session. Now, guys, if you're still not sure which kind of session you're actually trading, okay, let me show you Forex Market Time Zone Converter. This website here, guys, well, you can also use, well, I will show you now, but let's go step by step. This is a website that usually does most accurate conversion on the internet. Okay, so this one, it's called forex.timezoneconverter.com. Okay, so it's very accurate, I need to say. And usually when you go to this website, you will see the time, whether the session is open or not. See, currently I'm based in Belgrade. My time is 5. Okay, it's 12. You can refresh it like this. And you see here 5:13 p.m. 8th of March 2016. And here you see London has been closed, but New York session is open now. So this is when London session starts. How you trade false breakouts? Well, actually the first 3 hours of each session, well, you can go with Frankfurt within the first 30 minutes, London also within the 30 minutes, and New York within the 30 minutes of the first hour, guys. So if London starts at 9 a.m. my time, I would look to trade false breakouts at in between 9 a.m. and 9:30, 10 a.m. and 10:30, 11 a.m. to 11 to 30 past 11. Okay, so the first 30 minutes during the first 3 hours of each major session. Is it clear now? Please confirm that it is clear. So the first 30 minutes within the first 3 hours of each session. Okay, good. That is important because you don't trade false breakouts during the last 15-20 minutes. You need to do it during the first 30 minutes of each hour during the first 3 hours. So 9 to 9:30, 10 to 10:30, 11 to 11:30. New York 2 to 2:30, then 3 to 3:30, and 4 to 4:30. Okay, my time. This is my time. Of course, if you're a user of Admiral Markets, if you have a live account, if you hold a live account with Admiral, this is a session map here. And just by looking at session map, you can see which time zone you are currently at. So this is also very, very handy, guys. Session map. Okay. False breakouts lead to stop hunting, and then your account can be really severed, especially if you don't use stop loss, which I never recommend. False breakouts tend to happen in ranging markets, usually at the open of the market and the first 3 hours of each session. I've already explained it, right? If you trade dollar, then the first 3 hours of London and New York session, of course, euro dollar, pound dollar, right, dollar crosses. Japanese currency tend to have less fake outs during London and New York time, but of course, conversely, during Asia session, well, Japanese currency pairs are susceptible to false breakouts. So you should definitely pay attention to it. And don't be fooled by the price movement, because if it happens, you know what you can do in order to prevent the loss. How to actually trade those fake outs, now I will show you. Also, guys, if you're in, just a quick digression from our webinar, of course, because you see the analysis today on pound dollar that I made it with Forex Street. Now you're in profit now, guys. If you traded this, you are in 30-40 pips of profit now. The reason why I do the analysis on Forex Street on Tuesdays is that Forex Street asks for so-called exclusive analysis. And that means that the only website where it can be published is Forex Street. So usually Tuesdays and Fridays are reserved for exclusive analysis. But yet again, it always leads to, of course, Admiral Markets, because we are the providers for Forex Street. And yeah, well, you see, now you're in profit if you traded this. So I wanted just to make a quick digression. So where did we, okay, where were we? We will use daily pivot points. Yes, guys. For this, you can use classic pivot points. You can use Fibonacci pivot points. But I advise you to use my pivot point indicator that I have already sent to. I have sent it to most of traders. I'm sure that 90% of you have pivot 2 indicator. That is actually Camarilla and classic pivot point in one indicator. That was coded by my friend from Croatia. And well, if you still don't have it, just feel free to email me and I will send it back. So, well, that is how we use it. We need to make candles blue and red because fake outs will be easier to spot. You don't need to make it blue and red, but fake outs will be definitely easier to spot. We do it solely on 1 hour time frame. We don't use 5 minutes, 15 minutes, solely 1 hour time frame. When the market opens, we need to see initial direction, then reversal. So if we are going long, we wait for the first bounce of the important level and candle color switches from red to blue. I will show you in the real chart, so don't worry. If we are going short, if we are if you're going short, we will wait for the first bounce of the important level and candle color switches from blue to red. So immediately at the switch of the color, at the color change, you open your trade. So there is no way you can put on any pending order. You need to carefully observe the price, and literally at the first notice of a color change, you open the trade. Okay, stop loss is 1 to 5 pips below last low or last high. TP is the next pivot point, or anywhere from 10 to 25 pips. Okay, and this is it. So you can see it here. The market opened here. It went. Okay, now look at this. Next candle open here. So we are trading next candle. Next candle was actually bullish, right? Because it went above the close of previous candle. So it was blue. But as soon as the price started to change its color from blue to red, we open a short position, because that is usually a sign that the price will reverse. Okay, like this. Here, the price, the candle was blue here. See, it even broke through this pivot point. But at this time here, the price changed from blue to red. And look at this. When you trade breakouts, you don't want to leave your trades, because trades are always fast in, fast out. Hit and run. Right? Hit and run tactics. You need to be predators. You need to be very fast with your fingers. This is not for positional trades, because fake outs will fade and the price will get back to its normal trending mode or ranging mode. So you don't want to leave it in a form of a positional trade. You don't do it, guys. Okay, another chart. Here you see the price went here, bang, it started to switch color from blue to red and it went down. Here also you see the price was red, then on the next candle it was also red. It went down, it was red because it was bearish, but then bang, if it happened during the first 30 minutes, well, you could see a nice long trade. I usually would close my trade during the same hour because I use it in a form of a scalp most of the time. But as I say, you can also do it in a form of, let's say, hourly trade. So if you see that the price is going up, you can place your profit stop here and ride a free ride. But it's not meant to be positional trade. So once you open your trade, you can either take fast profits or you can actually place a profit stop once you are in profit. It doesn't, I don't have any strict rule with profit stop. I just observe the price action. If it's close to pivot point, then I might go with 10 pips, 15 pips. It doesn't matter. If the price breaks with a strong momentum, then I usually place profit stop around pivot point resistance in this case, or support, of course, if it breaks down. So in this example, if I spotted, let's say, if I spotted a strong momentum to the other side, that indeed it is, because this is momentum candle. At the close of the candle, if I'm long, of course, if I still haven't closed my trade, I would definitely put my profit stop here, somewhere here. And if I see that the price is breaking through next resistance, then I would place my profit stop here. Well, easy, right? Same here, a lot of examples. Okay, rejection here, you see. Here, you can also add round numbers. I'm not sure that I still have the indicator for round numbers. I might have it, You can Google for it. I'm sure it's free. Round numbers indicator or sweet spots, I think it was the name. So Google for it, please. I think it was round number indicators because price will usually respect rounded. I call it round numbers. Actually, you see, these are all rounded or round numbers. So price will respect 50s, right? 50 zero zeros, 50 zero zeros, even 20s. So this is how it looks like. See? Very, very, very clear rules. Additional advice is then live chart. Candlesticks give you a signal when price is about to change. You need to spot the right moment when bears are taking over. From pivot point perspective, when price reaches S3 or R3, it will reverse, initially 75% of the time. So guys, if you see that R3 has been hit, as in this example, 75% of the time, the price will reverse, as in this example. We don't know how big reversal will be, but the thing is you can at least go for a scalp, or you can hope that the price will proceed in your direction, as in this example. So it will usually reverse. Candlesticks give you a signal when price is about to change. You need to spot the right moment when bears are taking over. From pivot point perspective, when price reaches S3 or R3, it will reverse initially 75% of the time. So daily highs and lows are also suitable. If the price hits daily high and switch its color from blue to red, you can also open a fake out trade if it happens during the first 30 minutes of first 3 hours of each major session. So on live chart, guys, it would look like this. So let's use, okay, here. So this was our London Open, you see. And next candle, actually, well, this is not a good example. Let me find a better one. Oh yes, here. 1, 2, 3, 4. This was, yeah, this is, okay, this is New York Open here. Okay, this is New York Open candle here. So fake out. So this candle was initially bullish, right? And probably at this point, it turned to a red color. But of course, if it happened during the first 30 minutes, you would open a trade and you would have been in a good profit here. But it needs to happen during the first 30 minutes. Okay, there is no trade here. Yeah, why do we can use also historical price action. Okay, now this will, okay, so, okay, this is closed. So like this, pivot point, indicator, and show history through. Okay, guys, let's assume, yeah, that this was, for example, that this was a New York Open. It wasn't, but just for the sake of the webinar. So price went here, bullish, hit the resistance, and here it started to change its color from blue to red. When the price changes its color, you immediately open a sell trade. So let's see. We really need to find, okay, here. Okay, it's Frankie fake. Price was bullish here, open as a bullish, immediately changed its color from blue to red, and look what happened. So the logic is simple. You just wait for the price to hit important support or resistance and to change its color. If you want to open a short trade, then the price switches, the candlestick will switch its colors from blue to red. If you opt for a long trade, the candlestick should change its color from red to blue. Okay, so easy enough. If something, of course, is not clear, just feel free to ask me. How do we trade pivot point breakouts? So guys, first of all, let me tell you that it shouldn't be confused with price action breakout that we will use. Okay, so price action breakout is actually either a trigger happy, breakout retest, or breakout pullback continuation. So this is different. This is just purely based on pivot point breakouts. So you open 1 hour chart, observe the trend and patterns, EMA, MACD, candlestick patterns. Then open M15 chart, so you need to watch for trend because you want to trade in the trend direction. You don't want to go counter trend. Watch for EMA 5-8 cross, but your EMAs need to be 5 for close and 8 for open. Price needs to close above or below pivot point in the trend direction, and MACD needs to cross in the trade direction. So why EMA 5-8? Because stocks use SMA and Forex traders mostly use EMA. SMA applies more weight to historical prices, and because you're actually trading now moment breakouts for quick scalps, you actually want to use EMA because it applies weight to most recent prices. 5 and 8 are Fibonacci numbers. 3 plus 5 equals 8. Or past plus present equals the future, right? Also, many traders use it. It's a popular combination. Works in trend, but doesn't work in range markets. That's it. That is why we need to spot a good trend. It's always best to take breakouts in trend direction. We also need a momentum, and the price will definitely respond quicker with 5 to 8 EMA cross. Okay? Okay. So let's see the questions. Everything is clear. Great. Okay. Now, if anything, guys, is not clear, please ask me now because I will move on to actually showing you the slide and to live charts. Someone someone asked why 5 close 8, why 5, no, this is it. 5 close 8 open. Okay, this is how you actually should do it. 5 close 8 open. Okay, so this is how you do it. Marco is saying I close GBP for 30 pips. Okay, great. Let me respond. This is what Marco said. Okay, excellent, Marco. Well done. So good. I like when traders actually make money. Okay. Let me see. Okay. So MACD needs to cross in the trade direction. And this is how it looks like. So you see, even this system gives us cues that euro dollar will actually go above R1 and it will proceed towards next resistance. But how we actually place trades? So if we know that euro dollar is bullish, which indeed it is for the last couple of days, first of all, we could trade pivot point breakout. So EMAs have crossed here, MACD crossed upside, and at the time when price closed above pivot point, you see MACD was crossed, EMAs were crossed, so that was a confirmation that this is indeed a strong breakout to the upside. Same here. See, it almost hit the next resistance level. Again, breakout to the downside, hit pivot point for previous day. But it's always good to go in trend direction. And because this is simply a breakout of pivot point, you want to go for a quick profit. You don't want to hold your trades for too long. And this is actually a live chart. So euro dollar here, pound dollar. Okay, this is Mari Matt. I will go with pound dollar at the minute. Okay, look at this pivot point breakout here. EMAs were crossed. Look, the price went down, breaking through pivot points. But when the price closed below pivot point, the first close of the price, MACD was also crossed down. So this is the signal to go short. So we go for the close below the pivot point while EMAs and MACD are already crossed. So this was the signal. Look, almost to the pip. Looking good, really. So usually you trade this in a form of, I can say, of a scalp, or in a form of a quick hit and run tactic trade. Because the price will respect EMAs most of the time. But as I say, you need to decide whether you will trade a fake out or breakout. It's up to you. So you need to decide. Usually pound dollar is good, euro dollar is good also to trade. And usually the first breakout is most profitable one. So I say always first breakout. You see here the first breakout. And you look at the time, 2:15. So actually, right, Asian session. So this was a signal actually. This candle here, because MACD crossed here. Okay. Sometimes you will see that you don't need MACD above or below zero. Sometimes this will be enough. Just a simple cross of MACD above or below zero line. Because if you remember, MACD is momentum indicator. So this actually tells us that MACD is bearish, but it lost its bearish momentum and it's going up. So sometimes this will be enough. This cross here. And actually you can take this trade also because the cross has already happened. So here at this candle you open your trade. Even pound yen, guys. Look at this. This was a false breakout, okay, here. And then a real breakout here. Look. Straight towards next targets. Here also. Okay, not here, but exactly here, real breakout. Okay, here also. Look at this. Breakout to the downside. So just follow this and practice it. because this will be your homework. As I say, focus on dollar crosses for London and New York, and yen crosses for Asian session. Here, see breakout to the downside. Price closed below pivot point. EMAs were crossed. MACD crossed also below zero line. See, strong signal to go down. Practice it. As for stop loss, conservative stop loss is last higher high, 3 to 5 pips above last higher high, or 3 to 5 pips aggressive stop loss above this candle or signal candle high. Vice versa for shorts. So today we learned about pivot points. We learned the structure of pivot points. Your homework will be to plot any pivot point indicator and observe the action around pivot points. Practice fake outs. Practice PP breakouts, pivot point breakouts. And next to come is Murray Math. Riyazit is saying gold 1 hour is a fake out. Let's see gold chart. Yes, this is a fake out. Indeed, look at this. It was very, very bullish. And here, bang, rejection. So yes, gold is a fake. Definitely. Fake out. So guys, this was it. If you have any questions, you can ask me. We will also have a question about questions and answers in like three lessons. So we will talk about Murray Math next time. You will see scheduled webinars on Admiral Markets website. And yeah, yes, Apostolos. But the thing is, it's already end of day. So if this was London session or let's say another major session, the first 3 hours and the first 30 minutes, you can trade it. But look, it's 20 minutes till the close of this hour. 20 minutes till top of the hour. So you don't actually call it a fake out. If it happened during the first 30 minutes of this hour, considering that, let's say we had, for example, first 3 hours of London or New York session, it could have been a fake out. But because it's end of day, because it's 20 minutes till the top of the hour, it's not a fake out. So respect the rules, guys. If you're not sure what the rules are, these are the rules. Okay? If you have any questions, now is the time to ask me. And if you don't have any questions, we can call it a day. Okay, I don't see any questions, so I assume everything is clear. And that's actually great. Thank you guys for listening. Next webinar is on Thursday with Chris. As I say, for any questions, go ahead and ask. Send me an email. This webinar is being recorded. It will be uploaded. Of course, Goran is saying, good job, nice teaching. Thank you, Goran. So I wish you to trade safe. I wish you to be good. And of course, guys, if anything is not clear, don't hesitate to ask me. Cheers, everyone.